Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Market Today. The guest that we have live with us now is Mr. V. Vaidyanathan, the Managing Director and Chief Executive Officer of IDFC First Bank. Welcome, Mr. Vaidyanathan, to the show. Your bank has reported steady profits in its results for the fourth quarter. Take us through the key performance highlights of the quarter.
The first thing is that the reports came out that profit is down 10% over the same time last quarter. I'd like to just touch upon that for 10 seconds. The last year in our profits, we had specifically called out that our profit, we reported 800 crore, but we actually pointed out that, there was a one-time income. Net of that was actually 700 crores. So this year, 723 crore. It's still enough, but it's not like 10% how the reports came out. So I just want to clarify that first. But more with regard to the fact that since you said what are the key highlights, the key highlight we see is the deposits are coming very strong. I think 40% on such a large base, we are now almost touching 2 lakh crores. 2 lakh crores. So 40% growth on deposits it's coming very strong for the bank. And the other big thing is that the profitability. If you take the FY24 profitability, excluding treasury gains, because treasury is treasury, it can go either way. But excluding treasury core income, profit of the bank is something like 2,800 crores. And last year, excluding treasury gains, was 2,100 crores. It's up 28% over the last year. So I think that the core bank is doing very well on profitability and deposits. That's the long and short of it.
Okay. The stock seeming to have reacted negatively, but you've clarified the point, and hopefully investors will take note of what you've just said. Let's now look at a broader point, Mr. Vaidyanathan, since we have you with us. The legacy IDFC book, in some analysts' view, is as good as gone now. That book is just 1.4%, and you have enough provisions, and over the next 2-3 quarters, this is what analysts are saying, and I want you to respond to this. The bank should complete the running down of the book. Expand on that point.
See, at the time of the merger of the bank, the biggest concern was actually people had two big concerns about the bank. One was deposits. We did not have retail deposits. Our retail deposits only 10,000 crore. People said, "Oh my God, how are we going to grow?" Because there's so much competition. The second big concern people had was, "Oh my God, it's sitting on so much infrastructure loans." I'm really happy to say that a 22 or 25,000 crore book has come down to only 2,000 something crores now. So big achievement of the bank that the entire infrastructure book has been wound down, except barring the small amount left. So there is no more. The short point is that there is no more pain yet to come from the infrastructure book. Is fully provided for or fully accounted for in the NPA. So you can be at peace. So there's nothing more to come. And the bank now, including infrastructure, by the way, there's some bad loans infrastructure, including infrastructure, bank NPA has come down to 1.88%. And bank's net NPA has come down to 0.6%.
Okay. Let's take a look at loan growth. And again, I'm referring to commentary that's out after the results. And basically, you're being described as now predominantly a retail asset bank. You had loan growth of around 25%. The unsecured loans remain at 60% of the book. Credit cards book has started to grow sharply, and home loans are now growing as well. Give us a sense of loan growth, and especially what is the outlook for FY25 in this regard?
No, there is one correction on your numbers, I'll say, but I'll say it as we speak. On the loan growth front, yes, of course, the bank is, for the first 3 years, 4 years, the bank did not grow the loan book, just grew deposits. And with all the money, we did not use it for loans. We just paid back all bulk deposits, certificate of deposit. We took out all those kind of, bulk money. I rather paid it off. So now 78% of the deposits of the bank are retail. It's a very big achievement. It's like 27% before. So that is as far as the on that front is concerned. Now, second point you said is about unsecured. I don't know what number you said, but I'll tell you the facts as they are. Our unsecured loan book is only 15%. The unsecured retail loan book is only 15% of the total book. It's really not very much. It's quite safe and stable. And more importantly, the NPA on that book is only 1.5% on the unsecured book, gross. And net is only 0.38. So it's behaving superbly well. Later, we'll tell you why it is behaving well. So let me just say that these two are the big items. Now, going forward, frankly, bankers getting a lot of deposits, we should be able to grow loans, comfortably.
Okay. Let's talk about deposit growth because you mentioned that point. But if we see overall, deposit growth has improved at most private banks in the fourth quarter, but at higher cost. What about your bank, and how do you see it panning out in the next few quarters?
The funny thing is that last year we brought down our deposit rates in the 0 to 1 lakh bucket where most people leave money from 4% to 3%. Siddharth, we brought it down to 3%. Now it is in the league of the big banks, and in that bucket. And surprise or surprise, the deposit is still growing 40%. So this is something amazing about our bank, that the bank has evolved into a brand which is attracting deposits. Actually, when you're not a brand, you have to reach and knock at people's homes and ask for money, ask for deposits. When you become a brand, the brand attracts deposit. That's a very, very big moment in our bank's lives, actually. And that's really happened to us, and we feel very proud that it happened during the last few years.
Let's also take a look at Kasa, which is stabilizing, and the ratio from the highs of 51%, according to the analysis that I'm reading, Mr. Vaidyanathan, says that it has now come down to 47.2%. And over the long term, analysts are expecting, and this has got a lot of traction, that 40 to 50% is where Kasa should stabilize over the long term.
So the thing is that on Kasa, as you know, last couple of years, interest rates have been up, so people have moved money from Kasa to fixed deposit. But at least overall pie is growing for us. Like I said, it's like touching like 2 lakh crores on deposits of the bank. So Kasa has come down because of that reason, but still 47% is a very good Kasa. Very good Kasa. And remember, it's just 5-year-old bank, or we started raising serious deposits only 5 years ago. To touch from 8.5% to 47% also, it's a good number. The key reason is frankly the quality of service we're providing. Because in Kasa, it's a transactional account. Unlike fixed deposit where you leave the money and you get paid interest 1 year later. Kasa is because quality of service you give, because people will transact with you every day. So our service levels have really made a big difference. Our app is something very, very special, Siddharth. It is really fantastic. So these are some reasons why Kasa is growing.
Since you spoke about service levels, I want to digress a bit on something that I as a user have experienced, and this is your app, which I will go out on a limb to say is perhaps the best as far as user interface is concerned, ease of use is concerned. And because why I highlight this, viewers, is in the recent past, you've seen some sort of regulatory rap on the knuckles also when it comes to technology backend for certain other banks. But Mr. Vaidyanathan, what went into building what is clearly a very, very smooth app experience?
It's really one of the very, very good apps of the country, not just in banking, I think across. It's really fun. I'm touchwood, I'll be very careful using the word fantastic because you shouldn't jinx it. But the thing is that the fundamentals of the app has been built very strong, the way the tech stack has been built. But I'll tell you what is very special about our app. The user interface screen, it's just very different, very, very new age and very fintech. But the solutions make it special. I'll tell you, solutions mean what? If you want to make a fixed deposit, you click 3 buttons and the FD is made immediately. If you want to make a loan, you can drag and drop the loan amount, drag and drop the EMI you want to pay, click the button, money's in your bank. These are special features. By the way, in that instant of 3 seconds, the system is going and booking a real loan on the books of the bank and crediting the money to you, like real live. For example, we're giving, mutual fund investing. Now, everybody knows that mutual fund is mutual fund sahi hai, you have to invest in mutual funds. But which mutual fund? There are 1,000 equity funds. So we do some research and help you select the top 3 mutual funds, which based on our research in the next 1 year will perform better. And we give this, so customers when they come, they can click, they can see what is inside the mutual fund. We have a live API connect to know which are the companies under the fund, and then you can buy. So these are some very special solutions we bring for customers.
Okay. Mr. Vaidyanathan, your brand, and even from the past, it's like a corporate brand. But when you see your business performance, it's clear that you have a significant diversified portfolio when it comes to Bharat, rural India. How is business there? How have margins been performing, particularly from the rural India segment?
See, when we started our bank, I guess bank started somewhere in 2016 or so. But when I mean that after the merger in 2018, the key issue we had is that we were very short of priority sector loans. We were so short that we had invested close to about like something like 4,000 crores in RIDF. RIDF is like, think of money that you leave at a very low interest rate for long tenor because you don't meet PSL targets. So one of our needs was PSL targets. So now what we've done is we've grown the rural business, and I'm happy to share that we are meeting all our PSL targets now at the bank. We are not investing one penny into RIDF. Think almost like a penalty money. So we are not having to put any money in RIDF. We are meeting all our priority sector target, and that is coming from the rural India capabilities. And by the way, we are very specialist there because the asset quality is really just very, very good in rural India.
Okay. Let's also turn to some of your other products, including your significant presence and leadership as far as FASTag is concerned, or even UPI volumes. An outlook there, and more importantly, what have you done to handle these kinds of volumes? Because when we speak to some other bankers, this ease of transaction for the customer translates into significant investments, both in terms of men and technology for banks like yours.
This is we believe that we are building the bank really, really for the long run. You know, quarter on quarter is not our focus. Of course, we are a listed company. We have to respect the markets. But end of the day, if you build for long, then you know the short term gets taken care of. So on this front, therefore, we have to build we are conscious building a very, really good technology stack at the bank, which is contemporary, which is latest, and well integrated with each other. So whether it is FASTag or whether it is UPI, or whether uptime of the bank, whether the UI UX interface that customers are experiencing from the mobile, everything is coming from a very strong technology stack. So people can't see it; they just see the numbers end of the year. What is ROA, ROE, and all that. But what is really meaningful is a tech stack actually.
Okay. Let's also come down to the physical sort of brass tacks of banking, and this is branches. You've continued to expand, and as I understand, 940 plus branches. What is the plan for future expansion in this regard?
See, we feel that we don't need to incrementally add very many branches actually, because our existing branch network is giving us good deposits. So therefore, currently we have reached, like I said earlier, like from 38,000 crores to 2 lakh crore, or maybe 1.93 lakh crore on deposits, which is 2 lakh crore including certificate deposits. Now, we feel that when the next 2 lakh crore comes, we don't need to grow 900 to 1800. And when 6 lakh crores come, 1800 does not have to become 2700. It doesn't have to go linear anymore. Now, incrementally, business will come digitally because we built a very good tech platform. So let me just say that we might add maybe 100, 150 branches per year. That's more than enough for us to meet our, which means that branches will grow at a slower pace than if deposit grow 40, branches will probably go like 15, 20%. So,
okay, let's talk about capital adequacy. And you've consumed 71 basis points of tier 1 capital this year. Your ratio in this regard is now at 13.36%. You also raised 3,000 crore from equity dilution. Any further details and future plans that you may want to share in this regard?
Yes, during this year, actually, the regulator raised the risk weights for consumer credit, and you could see that consumed 100 basis points of our capital. So that was just part of the environment and regulations. So therefore, we are at now 16 on the overall basis. So therefore, coming year we will raise capital and we'll raise maybe some more equity. Because that will make the balance sheet very, very strong. I think our net worth is something like about 31 or 32,000 crores now, something like that. And if we raise some more capital, it will set the bank, for a bank to have strong capital, it helps us take full advantage of how the Indian economy will grow in the next few years.
Since we are talking about the Indian economy, what's your sense of how consumer demand is likely to pan out in the current financial year, given the patterns we have seen in the previous financial year?
See, as you know, we are very strong players in the Indian consumer market, whether it is, durables or two-wheelers or vehicles or homes, they're all consumption items. So we are very significant places. We have a very, very grassroots view across every consumption item in the country. And we track them very closely. Our sense is that the consumption demand is very strong when we hear all the manufacturers and we're financing the products. So it's very strong. In fact, basically what is fundamentally happening is that, which you may not see on a day-to-day basis, but you can, the numbers are speaking, that a lot of customers are moving in from the lower income to the mid-income customers are becoming, upper middle income are becoming rich. So this process is going on in our society, and that is leading to big consumption.
One of the quick points about consumption, and this is credit card business growth. Again, from a broader point of view, how is this segment doing for you, and what do you see happening in the future?
So on the credit card business, I'd say it's one of our finest launches. We launched it with customer first principle. By the way, if you don't have our credit card, you must have one because it's a relatively lower APR. No joining fee, no annual fee. There are no hidden charges. So and reward points, by the way, in our credit card reward points can be redeemed online. We're the only bank doing this. Basically, you can go to Flipkart or Amazon and you can use your reward points and purchase it. You don't need to buy only item given by the bank against the reward points. So this is a good card. So now coming back to your question on numbers, we have now reached about 2.5 million credit cards. But what is special about credit cards is that we open it all digitally.
Okay. Okay.
And before we move on, let me just say that lest you forget that regarding the bank account, we are the only bank in the country which is giving all services on savings account free. You can withdraw money any amount of it, from any ATM, from the no charges. You can withdraw money from non-home branch, no charges. NEFT, no charges. IMPS, no charges. RTGS, no charges. Debit card fees, no charges. It's like you'll really enjoy our. If you're not having one, you should have our bank account. Not you, I mean.
I think you miss locker fees also, at least for certain account holders, from what I recall.
I'm not sure of lockers, but I think all savings accounts of the bank, everything is free. And basically, this is a small amount that you don't realize that it's being hit to your bank account, which you may not. But it may look small, 150 rupees. Someone bills you 15 rupees a quarter for SMS charges. It looks like small. Well, it's money.
Well, absolutely. You added by drops. As we move to the conclusion for our conversation, I want to ask you about a broader issue that we have seen, and you mentioned the regulator. This is the sort of regulatory action and oversight that seems to have been increasing in the recent past in the broader financial space. What are your views in this regard? Because as I understand, you also had a small 1 crore penalty on account of non-compliance when it comes to loans and advances. Is this par for the course, or is the regulator sending out a broader signal?
No, first I'll clarify on the 1 crore since you raised it. Our bank, this was an infrastructure loan given somewhere in 2016 or 17 before, before the merger of the bank and becoming IDFC First Bank. It was IDFC Bank. What had happened was that to one Karnataka public sector unit, there was a loan given, and the premise of the repayment of the loan was that Karnataka government will allocate state budgets, budgetary allocation will be used to repay. Now, as per regulations, that's not permitted because every entity should be able to pay by themselves, not depend on the state government to pay them. So this is the regulation. Our bank had, granted a loan on that basis. So, we paid a fine of 1 crore for that. But let me tell you, that loan is fully repaid. There's no NP on the account. That loan is paid,
Okay.
exposure zero. It is a procedural issue pertaining to the past, which has been squared by us. So there's no, I just want to clarify that. Now, with regard to the other comment that you made, yes, we should be very, very, very careful because we are living in a dynamic world. There's so much of technology around. Crises often come unannounced. So that is why, the regulator is particular about these things. And I 100% agree with the regulator on being very cautious.
Okay, one final point, and I'm in Mumbai, and as I picked up the newspapers in the morning, I saw big front page ads. There was a different kind of tonality in a general newspaper, and there was one different ad in a business paper. So what's behind that? This increased marketing spend? Are you hoping to create a buzz, or are these hints towards something else in the near future?
See, basically, this is a full 5 years since the time the merger happened. In March 2019, we started, the merged entity. And at that time, Kasa was quite low. Our profit was not there. We were loss making. Our deposits were largely infrastructure corporate loans. So it was that stage. So 5 years is a long time. Short time in the history of an organization, but a long time for us to, have delivered results. So it was a round figure of 5 years, 2019 to 24. So we thought we'll chronicle what we achieved in 5 years. So, and also in a way, to give people more than achievement, also give people the sense of fullness of this bank. Because we say we are a universal bank. One comment you made earlier, the retail. We are a universal bank. We do all products. So we're a universal bank. The fact that we focus on ESG, the fact that we are, deposits are diversified, fact that assets are diversified, asset quality, customer experience, technology, employee experience. We brought it all together to say this is the real bank. We thought to bring out the culture of the bank.
So in a way, you are telling the market that the turnaround is complete, and take a look, we are out there giving out a message of confidence.
Yes, we said foundation. So in fact, as you know, Siddharth, and your channel have been tracking us, I never try to please the market every quarter because, we have to build a good bank, good foundation. So 5 years, we'd say foundation has been built. So next 5 years should be, other things remaining equal, next 5 years should be easier for us. Because on this foundation, you can scale. Think of how you build a building. You can't see the foundation of any building, it's below the ground. But if it's strong, you can build a good structure on top of it. And we have built a really good foundation here.
Absolutely. And remember, viewers, that all of this has happened in 5 years, which have been tumultuous, a lot of volatility, black swan events and all of that. And for V. Vaidyanathan to sort of keep a steady hand and helm the ship through these 5 years is very, very significant. And as you say, quarter se quarter tak is not perhaps the objective. It is about the next 5 years. And I hope to be able to talk to you in the future about that as well. Mr. Vaidyanathan, thank you very much for your time with us today. Let's take a quick look at the stock, and hopefully investors will take note of some of the fine prints that we've got from V. Vaidyanathan as far as the company is concerned. We'll see you again in just a short bit. Until then, goodbye.